Right now, I'm going to show you all the trades that I've taken this month to date. We're coming to the end of September 2024, and I've made just over $20,000 trading Forex. And all of this has been documented live in real time. I share my analysis in my free Telegram channel, which you can get at the first link in the description. And I also have a dedicated group where I share all of my exact trades with my chart terminal, as well as my actual trading terminal showing all the live trades. And I give all my updates for all the trades that I take in my Discord. It's called MFX Nick's Trades. I've creatively named it since it is me, Nick, who is trading. If you're new to my channel, welcome. I'm just some guy who trades. I don't have any complicated trading strategy to teach you. I don't have any smart money, liquidity, order block, distribution, fair value gap, candlestick, bullish Wagyu beef entry trading strategy. I'm not going to tell you to go and buy some moving averages and then trade some Fibonacci and some all this stuff. I just look at the chart and I use my experience to help me decide which way I think price is going to go. And learning this is probably much easier as compared to learning things like technical analysis and trying to have a structured black and white trading strategy, because most trading strategies don't work. Think about how many times you yourself have tried a trading strategy and you've tried to follow some rules. And sometimes it works and sometimes it doesn't. But in general, it either breaks even, did I say that right? Or it either loses money. You just can't seem to get profitable. I'm offering you an insight as to looking to see how things can be much different than you assume them to be. And that is simply just building up experience and asking yourself if you think price will go up or down. So let's go ahead and jump into it here. Here's a trade I'm in right now. It's GBPUSD here on the daily chart. We'll go here to my trading view as well. You can see it's already started to go into profit. Why did I sell here? This is very complicated analysis, so pay very close attention. I sold because price made a higher high, and now I think it's going to pull back. That's it. That's the whole reason. Whenever you look at price in general, you'll see that price goes up, and then it goes down, then it goes up, then it goes down, and then it goes up, and I think it's going to go down. Now you'll notice something interesting about my positions here. They're sized in a way where if price goes against me, I don't have to take a stop out. Now, a lot of people call this DCA trading, dollar cost averaging. Some people call it grid trading. Some people who are new to trading and don't exactly understand what I'm doing might call it martingale trading, even though it's not. I just call it, selling when I think price is likely to go down, and then having a risk structure that allows me to profit most of the time in general, even if I'm wrong. You see, think about it. As price goes further in one direction with no pullback whatsoever, the more likely it is to pull back. This goes contrary to the common knowledge that the more price goes in one direction, meaning a trend, the more likely the trend is to continue. I'm of the deferring opinion. In my 8.5 years of experience trading Forex and crypto and stocks, and in the past 6.5 years of profitable trading experience, because I lost money for the first 2 years or so, I've just happened to notice that the more price goes in one direction in Forex, the more likely it is to have a pullback. So I've sold, and if price goes against me, you'll see I have a sell limit to sell again. If price comes down into here, I'll make anywhere from $2,000 to $3,000, and if it goes against me, the drawdown could be a couple $1,000s before it pulls back, and then I'll either get out of the trade in a profit or a break even. Now, every now and then, I take a big loss, and it wipes out like a week or a month of profits, and in some cases, it blows the account. The only way I'm profitable is just because I withdraw profits regularly. That's it. That means if I'm able to grow the account over and over and over, and then just withdraw it every time I double it, for example, that means that whenever I do finally blow the account or take a big loss, it's just a small percentage of the trading capital. And it's not all of my trading capital in one account. And it's not all of the profits that I've made in one account. This is the only reason I'm profitable. I do not have any magic crystal ball. I do not have any specific strategy to sell you. I'm just saying, if it goes up and I think it's going to fall, I sell. And if it goes down, I think it's going to bounce up, and then I buy. It's not complicated at all. It just takes some experience. You can get experience doing some of the stuff I'm teaching you right here in this video, as well as in my free Telegram channel, which I just share my analysis every day. There's over 60,000 members in there. It's the first link in the description. It's just here to help you. So you can see I'm getting a call from my wife, Bonnie. I have to ignore this call just for you guys. That's how committed I am to teaching you. So you better pay attention to this video. I'm literally going to be ignoring the call from my wife. No, nobody tell her. Everybody keep it a secret, please. So let's go in here. We'll go a little bit further back. So I was in a USDCAD and NZDUSD trade. So we'll cover both of these. I sold yesterday USD Canadian dollar right here because I thought that price was going to go down. Now, why did I think price was going to go down? Because price went down and made a low, and then price pulled back, then it made a lower high, and then it looked like it was going to fall all the way to the next low. So what is this here? Price made a low, pulled back. I actually took a lot of sells up in here and I made a lot of money. And then price came all the way down and I sold right here. Now I also had a huge profit. It was like, I think it was almost 5 grand. I think it was 5 or 6 grand. We're gonna see here I'll show you here in a second. But I had a huge profit right here because I sold at this weekly zone. This was a break and retest of a daily / weekly zone, whatever you want to call it. Now, I sold up there and price started to come down and I closed in profit. And then I also sold again yesterday, targeting the previous low, and then price went to the previous low and it was a cool profit. I'll actually show you the moment that I called this trade, what it looked like. That way you can get a feel. Here it is. All right, this is where I called it out yesterday at 7 a.m. I'm short on USDCAD again, but with a tiny position size. It's a low risk entry, blah, 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 but you know, I've already made a 5K profit and here's the entry. So there's the entry right there. This is what it looked like whenever I entered a sell. So as you can see, I had a lot of sells clustered in here around the weekly zone. That closed in profit. I just got short again with a target down here. You can see it was a $400 target. Very small position size. This was another trade we'll cover in a second. This was, you can see 8:21 a.m. I added to USDCAD. This is how I share my trades. A lot of people who run groups where they're calling signals, which is not something that I do. I just call it Nick's trades because I'm not sharing these trades so that you can take them. I'm just sharing them just because they're the trades that I'm taking. And if you want to copy them, then you're free to do whatever the hell you want. But I call it Nick's trades because these are actually the trades I take, and I prove it because I show my live terminal right there. I show the account balances, I show the P&L history, I show the chart terminal, I show the entries, and I do it all the moment the trades are taken. It is not some BS of like me just typing buy GBPUSD, stop loss here and a target here, but not actually showing any chart terminal. No, I show all of my live accounts, and I've been trading live for the past 6 years since I started my free Telegram channel 6 years ago. I can't believe it's already been 6 years. So with that said, you can see I made all this. You can see I added right here. I always show my chart terminal as well, so that way everyone who follows my trades, they're able to see all the trades that I'm in. Like at any given moment, they can just open up the Nick's Trades server here in Discord, and they can see what trades I'm in. So here you can see USDCAD started going into profit, and then it continued down. USDCAD almost hit my target, but due to the spread, it didn't close. So I just closed it right there. It was two entries. So you can see right here on USDCAD, it was about, $600, a little over $600. Then plus I made almost $700 on an NZDUSD trade. So why did I take that trade? It's just because it made a new low and then it pulled back, and I thought it was just going to go back and touch the previous low. Some would call it a trend trade. It's just, a lot of people box themselves into this like black and white thinking. They think, I need to wait for it to get here, then I need to buy, then I need to put a 1-to-3 risk reward ratio and a stop loss just under the zone, and I need to have above a 35% win rate or something. I don't know. It's just, that's so complicated. And like you've probably noticed, like it doesn't even really work. It's just, it's all up and it's all down. Better to just get some experience seeing the same thing happen on the chart over and over again. You can get experience by following my analysis in the free Telegram channel, or you can just literally subscribe to my Discord, see my exact trades. But getting experience teaches you something that gurus like me cannot. Experience teaches you what to do given the context, using your creativity and your discretion and your subjective judgment given all your experience. It gives you that feeling of like, You think price is going to go from here to here, and so you get short. And that's the whole reason. People will look at you and they'll say, well, did you sell because there's a resistance zone? Or was it a downtrend and then it pulled back to the 61.8 Fibonacci? Or was the moving average going down and then so you waited for it to touch the moving average and you sold? None of that matters. Because even if you're using those things, you still have to use your own discretion, if you're manual trading, to be able to make that decision as to whether or not you're going to buy or sell. And since you have to do that anyway, I'm just a person that's sitting here saying, why not just start there? Why not just look at the chart, watch what happens over and over, just play around on a demo account. I have a whole video here on my YouTube channel. I made a couple videos back on how to start if you're a complete beginner. And with this, you pair that experience with your discretion, and then after you get enough experience, you can just start making these decisions like, yeah, that looks like it's going to go up, that looks like it's going to go down, and then the experience is what helps you trade. This is so much easier in my opinion, and it's so much more simple as compared to any other way of learning trading. Simply getting experience. Who would have thought? You get better at something the more experienced you are. If you do that here in trading, and you refrain from trying to approach it as this black and white science with these absolute trading rules and all this stuff, it's just too mechanical and it's just too complicated, and that does not pay homage to what trading actually is, which profitable trading is a nuanced skill set based on your experience. It is not something you can just teach a robot and have a robot do, because even when people try to program robots, most of them fail. The only robots that are working are robots and algorithms that are traded by hedge funds and money management firms that have billions of dollars in assets under management, and they've got hundreds, potentially even thousands of people working on coding them. If you think that's going to be you, good luck, have at it. If not, if you want to go do that, go ahead. For the rest of you who just want to trade like manually and just look at the chart and just use your experience to decide if you think price will go up or down, come on, we're going to finish the video. So you'll also see that I bought NZDUSD. These are I call plenty of trades. I take anywhere from like 5 to 10 trades per week right now. So I'm just going to go through them in the as we come up through them here. USD Canadian dollar, you can see this is where I sold, right? So I called these was a trades that we've held for maybe, it was like 2.5 weeks. I said 3 weeks there, but it wasn't. It was like maybe 2.5 weeks. This is where I closed the positions. This was 2 days ago. I closed the position, so it turned out it was 5K. It was just under a 5K profit. This is just on one trade, and I had just entered at the weekly support resistance zone. That's it. That's how simple it was. It was just a break and a retest. Generally what I've seen is the higher up on the time frames you go, like weekly, daily, 4 hour, that tends to be more reliable. I don't know why. I don't know if I'm just self-deluding myself or if it's actually true, but I've tried trading on like just the minute 1 and minute 5. I've had periods of it working kind of sorta, and then periods of it kind of being break even or losing. But the best results I've ever gotten was 4 hour, daily, and weekly charts. And to be fair, I don't really look at the weekly that much. It's mainly like 4 hour and daily. Like you have all the information you need right there, in my opinion. Everything else just moves so fast. Like the 1 minute and the 5 minute, at least in the Forex market, it's just a bunch of noise. I just find it really hard to trade. But whenever you find setups like these in the weekly chart, it's just tends to work out a lot easier. I'll show you that NZDUSD trade that I took. I took it right here on this breakout, and it was something that I shared in my free Telegram channel. When you join, you can scroll back up to a couple days from the date of this video, and you can see there's something that I coined here on my YouTube channel like about 2 years ago, and it is the more support resistance zone is tested, the less likely it is to be respected. What this means is that the more that price starts hitting a zone in rapid succession, the less likely it is to actually hold and for price to bounce away. There's obviously tons of exceptions to this rule. I made a whole video about this a couple of videos ago, but in general, this rule applies and it works pretty well. This is one of the trades that was taken based off that. So first, if we go to the daily chart, you can see price had a huge move up, then it had a pullback, made a higher low. Then it started coming back up. I was looking at price whenever price was right here. And I was thinking to myself, okay, I don't think it's just going to stop at the high and reverse. I think it's going to continue up. But the final nail in the coffin that helped me decide that was in the 1 hour. You can see price tested the zone there, fell, made a higher low. Tested the zone again, fell, made a higher low. Sort of tested the zone again, fell. Then we have these like sets of lows that were all formed here. Then finally price got up here. This is where I bought at. Went sideways for a day, and then it rocketed up into profit where I closed it up here. Now, how did I know price was going to go up? There's two things. Before even getting into this, we have to define what we mean by know. Why was I reasonably confident that price was going to move up? That's what I mean by know, question mark, because you don't actually know wherever price is going. If you haven't figured this out yet, you can't predict where price is going to go 100% of the time. So you have to control risk and have a high win rate, or you have to use some sort of a risk structure to help you profit. What I mean is, what was I so confident about price going up over? Well, two reasons. Number one, price it went an impulse, made a higher high, pulled back, made a higher low. Then it started going up. Generally, the next move is a higher high after that. And if it doesn't work out, then I have a way to save the trade because I use a DCA and like sort of like it's like a pseudo grid trading approach where I add to losing trades, but all the risk is predefined and I already know what position sizes and where I'll be adding. So it's all like, it's just essentially profits from the volatility. So even if I'm wrong, I still would have profited on that trade like 99%. With 99% confidence, I could say I still would have profited on the trade. But in this case, I was reasonably confident it would go up because normally price makes a higher high. After making a higher high, higher low, starts going up again, it's usually just makes a higher high. So that was the first reason. Second reason is because it actually showed me evidence on the chart. Like I just showed you, price kept on trying to bang into that zone and it was not falling. Price just kept hitting this zone over and over and over, made a higher low, higher lows, higher lows, higher lows, came up, then started floating sideways. There was nobody selling in here. Normally, whenever price starts doing things like that, it can kind of help you predict breakouts a little bit better. What does that mean? That just means with plenty of experience, you might be able to predict breakouts, maybe a little more than 50% of the time. That's all that means. Even if you can get it right like 60, 65, even 70% of the time, you have a very profitable approach. And that's just one facet of a profitable approach, right? There's so many other things you can do. So let's look at a few more trades here. I don't want this video to end up being 2 hours long, so we'll look at, let's just say 2 more trades. I know I said I would show you guys all the trades, this and that. We're just gonna look at 2 more trades and then we'll call it a day, wrap it up. Because you can actually just see all this live every day by just joining my free Telegram channel. You can see all my analysis. I just posted, I just literally say like, GU is ready to drop. NZDUSD looks like it's going up. I don't give the exact specifics in the Telegram channel, but I do share enough to the point where it can actually help you start getting a feel for things. I don't even monetize my YouTube channel. I don't even sell courses anymore. I've got to make money somehow, spending all this time teaching. So I just charge for my exact trades and that's it. If you want to follow my trades, you can subscribe to my Discord. There's a link in the description. But the Telegram will kind of give you the framework for it. So follow that first for like a week or two. And then if my trading style resonates with you and you're kind of seeing like it's starting to click, then you can subscribe to my Discord. But if not, then just go learn smart money concepts or something, because I probably won't be able to help you if after the first week or two it's just not clicking. So let's look at a few more trades. So this is GBPCAD. This was very similar to GBPUSD. I entered a sell on this and I had a risk structure, which I'll show you. So we'll go look at the screenshot here in a second, but essentially I sold right here. I have a cluster of sell orders. I have another sell order up here, and I had pending orders to sell if price got up here to these 2 areas. Now, why on Odin's green earth would I have sold? Some people will be saying, but it's in an uptrend. Why would you sell? It doesn't make any sense. Let me show you. Price goes up, then it pulls back. Makes a higher low, and then it makes a higher high. Makes a higher low, and then it makes a higher high. And generally, what happens after this, somewhere in this general region, it generally just pulls back. Gold sticker for me. Price went up. I think it's going to come down. Once you get experience, you can start noticing very simple things like this. Whether it's a trend trade, right? Price is in a pretty clear uptrend, has a big pullback to the downside. You can buy, and then you kind of have a plan for what to do if it goes against you. Perhaps it's just a stop loss. Perhaps you look to buy again at the previous low, and then if that one doesn't work, you can buy again at the previous low. Like, so you have 3 total trades. Then if it bounces anywhere, you can just close everything at a break even, move on to the next trade. So you could be wrong 2 or 3 times in a row and still just break even. But if you're right and you buy and then it pops up and makes a higher high, you close your buy and profit, and that was a profitable trade. Now you can sell, and then whenever it dips and pulls back after making the higher high, just like this is doing right now, then you can profit on a sell as well. So now we can see the exact prices I entered at. I think I got them more or less right in that screenshot, but you can kind of see what I have set up here. This is a cluster of 3 0.5 lot cells. As you can see, I even bought on the breakout up here. You can see the more the resistance zone is tested, the less likely it is to be respected. So I bought, closed that, and profit there. Then I entered 3 short orders right here. Then if price comes down into here to profit, it would be like $1,500 profit. Then it went up, and then I added another sell. And then if it went up even further to 1.81 or 1.82, then I could just sell again. And you'll see my position size is a little bit heavier. I started this down here with like 1 lot because it was 2 0.5s. Then I added another 0.5, so it was 3 total 0.5 lots. Then I added 1 lot, and then I just have a sequential series of 1 lot entries. So it's not really martingale. Martingale would be like a 0.5 lot, then a 1 lot, then 2 lots, then 4 lots, then 8 lots, then 16, 32, 64. I don't recommend doing that. You will blow an account so quickly. If you're going to do that, you might as well just give your money to me, and I'll donate it to charity so that you don't have to lose it in the market. Martingale is a stupid way to trade. Grid trading and dollar cost averaging, using like same position sizing, if you approach it in a way that makes sense, I have a whole video about this a couple of videos ago. If you approach it in a way that makes sense from a risk perspective, it's literally one of the best things you can do, and it takes no work. Like, you can completely calculate the risk for a trade before you even enter it, and then if it bounces anywhere along this set of zones that you intend to add at, you'll know what your max drawdown is, right? Because you're not an idiot, I assume. You can see if I enter 1 lot here and then it goes to here, that's $1,000 drawdown. Then if I add there, then it goes from here to here, I'll now be in a $2,000 drawdown in the first one, then a $1,000 drawdown in the second one. That'll be $3,000 of drawdown. Then if it goes to the next zone, you'll be in a $5,000 drawdown. And if it bounces anywhere, you make a profit. Maybe it's like $2,000, maybe it's break even if it went against you a bunch. Then it finally pulls back and you just elect to be, risk averse and just close at break even. That's fine too. Using DCA has been, like, I've seen more people get results because keep in mind, I've coached like thousands of clients over the years, and my trading approach has evolved so much over the past few years. Out of the thousands of people I've coached, I personally, in my opinion, have seen the best results from people using DCA, just because it takes almost no work. Like, you don't have to play all these mental gymnastics. You just sell, and as long as the sizing is small enough and you have enough deposit in the account and the leverage is reasonable, like I have 1 to 50 because I have a US regulated broker. But as long as you do all that, if it keeps going against you, it's fine, because you just keep adding at the areas you already intended to add at. If you're using higher time frames, like 4-hour daily and weekly, there's already a set of areas that price is likely to bounce just because it bounced there before. Whether you're just using previous highs or support resistance zones, or it's just like in a nice uptrend structure that it makes a new higher high, generally it's likely to pull back. If you're approaching it right, you got some experience, you're structuring the risk appropriately, you're sizing small relative to your account balance. Most of the time, for me and what I've seen with my clients who have learned from me, is most of the time it's going to pull back and you're going to make either money or you're going to break even. And that's it. Every now and then you'll take a loss. And, usually it's a loss that's not very fun. It takes you a week or a couple weeks to get past it. But as you continue to grow the account, if you know that almost every trade is either going to be a profit or a break even, then it doesn't matter, because you just keep trading. And then, you know, like most of the trades are going to be either wins or break evens. Every time you double the account, you withdraw. You double the account again, you withdraw. You double the account again, you withdraw. Then if you blow the account on the fourth time, if you started accounts with $1,000 deposit, you know, 3 of them you grew, right? 3 out of the 4. 3 of them you grew, so you made $1,000 on each of those. The fourth one you blew, so you lost $1,000. So you're still left with a $2,000 profit. Now simulate this with like a $10,000 starting balance. That's a $20,000 profit. Keep on running the account balances up. Like it just gets bigger and bigger and bigger. But you know, you got to start small somewhere. So always start in a demo account. Trading is risky. Most people lose money. So use a demo account. So with that said, let's go ahead. Let's look at one more here. Here's I guess I shared a video here showing the past week. I think I guess this was last week. This was last week. Really good. That was 6K in just that week alone. Again, I'm up about like 20K. It's like over 20K now because I closed more profitable trades yesterday. So in closed P&L, I'm up like 20K. And right now, as we sit on this call, the last time I checked my P&L with some trades going to profit, I'm floating in like a negative $1,000 drawdown. So it's like this month is like, I think it's like 21,000 closed P&L. And then right now is like a negative 1K drawdown. It's not been a bad month at all. Here's a trade that's not going good. This is the only trade that's really not going good right now. This trade alone is in a $2,000 drawdown right now. So, and this was you know, it'll be pretty easy to see for you. So just keep in mind, these are my sells. I sold there, went down, pulled back, and I added 2 sells. Let's go look at this on the actual chart. So CAD CHF. I don't know why it's hiding from me. Okay, so CAD CHF, let's go to the daily. So as you can see, price is in a daily downtrend right here. So what I did is, as price had pulled back, I entered a sell like right here, right? Wherever it was. You could see, yeah, it's like right there. So I entered a sell, and then as price went down, I was kind of hoping it would break that low because my target is currently down here. It's just a lower low. And instead of going all the way down, it just bounced at the low, pushed back up to here, and then right here, that's the Zoom link to my live sessions. I did copy and paste. I'm gonna have to change that Zoom link now so that none of you guys can join it. It's a live session link to my live sessions I do at Mission FX. Let me try this again. There we go, Control V, Command V. So I've added another cell here, and then another one here as it started to go down. But it didn't work, it pushed further up into here. So it's like, oh my gosh, Nick, you only intended to make $1,000 on this trade, and now it's in over a $2,000 drawdown. Like, what do we do? It's gonna be fine, watch. Right up here is a weekly zone. The next area that I intend to add at is once price gets deeper into this zone. And I've chosen to add right here. So I don't know if price is gonna get there. It may just come back to these entries and I'll just close it around like a net break even if that happens. But if we can push up further, then I'll just add a 4th position there. Now, what would this look like here on the chart? It would look, price would be right in this region, 0.6336, this general area right here. Price currently is sitting way up here and then it's pulling back, but you know, we'll have to see what happens. And that's what'll happen. So if price bounces at this weekly zone in here, if price bounces right in here, what that means is that it would pull back and I can get out of this trade at break even. And this is even if I'm wrong. I've been wrong 3 times in a row, right? I entered that first position, went into profit, didn't make a new low, pulled back, I added to it, went up against me. Cool, whatever. If it bounces anywhere within the next like 50 to 100 pips, I make a profit. Even if it goes against me and it breaks above the weekly zone. I let it run up and up and up and up and up until the point I think it's likely to pause because it's gone up so far and the candles start getting smaller, or maybe we even get some bear candles. Then I just add there. At some point, price pulls back, right? Now again, every now and then you'll blow your account doing this. In my opinion, that's okay if you're making tons more profit than you are on the blown accounts. If this is why the only reason I'm profitable is just because I internal transfer my profits. If I didn't withdraw, then I wouldn't be profitable, because like this trading approach just it's guaranteed to blow your account long term, but it just usually won't most of the time. So there it is. So if price bounces here, then I'll make a profit. If price goes all the way up into here, this would be the next zone that I add at. Now that would be a lot of drawdown at that point. That would be like $5,000, maybe $6,000 of drawdown. But again, you got to keep in mind, there's like almost $200,000 in this account. So it's really not that big of a deal. And if it bounces somewhere, then everything will still be okay. So price goes up to here and I have to add up here. It'll be perfectly fine, because if that bounces, this position can be closed at break even. These ones can be closed at loss. Ideally, once price starts going really far against you, if you add a little bit heavier of a position sizing, again, not martingale, don't double every next entry. But I'm saying if you do one lot, one lot, one lot, one lot, and then it goes against you more. If you start doing like 1.5 lots, 1.5 lots, 1.5 lots, and then you start doing 2 lots, whenever it finally bounces somewhere, it doesn't even have to come halfway back between all your positions. In a lot of cases, it only has to come back like a third or a fourth of the way between the basket of positions, or I guess some people will call it a grid. That's like, you have all your entries. If you start adding a little bit heavier towards the top, then you just need a small pullback, and that takes you out at break even, or in a lot of cases, even a profit. But again, how likely is it for price to go in one direction without stopping anywhere, right? It's very unlikely. So with that said, that is CAD CHF. She's dropping right now, so I'm anticipating it's going to have some sort of a drop soon. Here was the first positions that I showed you, how I added cells over here on GBPCAD. Now we're getting back further. You're seeing everything. You can pause the video if you want to see any of this. Feel free to do it. Here was the last week, I believe. I try to do like a little recap every week just to show you guys everything. So this was, I don't know if that was the same week or the last week. This was that USDCAD trade. You can see where I was adding and stuff. And now it's like here, it's like past the low right now. Things like this just get really easy after you start getting a lot of experience. Here was so this is like what, 2 weeks ago. You can see the account was at 178K. We start going back into here. Let's have some fun. Let's go back even further. The account was at 176K. UJ buying here on USDJPY. I bought at the weekly low, and then price popped up on USDJPY. Let's see where that's at now. This was like a support resistance trade. Yeah, it's still going up. That was cool. I've been out of this trade since, however, like 2 weeks ago. But price did have a bounce right here, popped up, and I was able to get out of that trade. So that was one of the trades that was very good and didn't really take that long to play out. So as we go further back here, you can see, let's keep going. Like, what's going on over here? You can see the account was at 174K. Let's go all the way up into, we're at the 10th right now. 9th going back, 174K. I'm just looking at the terminal P&Ls. 172K. Anyway, long story short, like, you get the point. Here we go. This was it was 165K. So that was the balance. I was up on these GU trades. Let's go all the way back to see where that was the beginning of the month. Now the account is currently sitting at, you can't see where it's at right now, but it's about 190. So 165K to 190K. So that's actually more than 21K. So anyway, that's what I do. The best way to learn, again, is by getting experience. Now you can do this on your own, or you can have my help. You can have my help for free. You can join the Telegram channel, which is the first link in the description. If you haven't already done it, you should be sold on the idea by now of just being in my free Telegram channel in the next like 10 seconds. And if you don't like it, you can leave. It's cool. It's whatever. Some people don't like it. Some people love it. It just is what it is. There's 60,000 members in there right now. And I've been running it over the past 6 years. And then if you want to follow my trades in more depth and more detail, then subscribe to the Next Trades product. Again, it's the only thing I'm selling right now. Every now and then I'll open up my group chat for new members, but that's not very often. It's like 99% of the time all I'm selling is just like the group on Discord that I just showed you all the past month of trading history for, and you can just follow my trades there if you like. So that being said, hope you enjoyed the video. If you did, good. I'll see you in the next one. Cheers, my friend.